The gentleman from Oklahoma, Mr. Lucas, is now recognized for 5 minutes.
Thank you, Madam Chair, for holding this hearing, and thank you for the witnesses for appearing today. The financial institutions you all represent and the U.S. banking system at large plays a vital role in the communities by protecting savings, delivering quick and secure payments, and providing access to credit. Banks will have to help their communities, their businesses, and their consumers weather the intense economic uncertainty we're now in today. I guess my first question is, inflation remains at a 40-year high. Businesses and consumers are still grappling with commodity price swings, elevated energy prices, a tight labor market, and supply chain disruptions. U.S. real GDP declined in the first and second quarters of 2022. The Federal Reserve will again raise interest rates today, I suspect, which is designed to discourage consumption and business activity. How are you advising your customers on how to prepare for these conditions? And I'll start with you, Mr. Moynihan. What are you telling your folks out there?
So I think with the amount of uncertainty, job number one is to deal with inflation. Inflation has impacts on, as my colleague said, on the people who can afford it less. And so, the impact on the mortgage market of raising rates feels not good. The reality is it needs to be done to slow down housing appreciation, because 20% per year housing appreciation is not a good thing for people to keep up with. So that's job number one. And so when we talk to our clients, it's the same thing. The Fed will raise rates to get inflation, and then as an operating entity, as a consumer, as a company, as a small business, understand what that impact is. It's going to have an impact of slowing demand. It's going to have an impact of raising your cost of debt, and you should be making sure business plans and personal plans adjust for that.
Anyone else wish to touch on that? Okay. I remember the economic suffering we endured in the early 1980s. I was in college and just beginning to farm on my own, when the Fed had to strangle, and that's the appropriate phrase, high inflation out of the economy. And I worry that the reckless policies and excessive stimulus we've seen make the Fed's job even more difficult. But turning to question number two, during a recent speech, the Fed Vice Chairman for Supervision, Michael Barr, discussed how the Federal Reserve is considering how to develop and implement risk-related scenario analysis. I worry the regulations that could begin to use climate stress tests to shape and enhance capital requirements, I worry about those, which could have negative long-term economic consequences. Climate scenario design and associated data remain considerable obstacles, as well as the high potential for politicization. Mr. Dimon, could you discuss your perspective on the argument that the Fed should tie climate risk with increased capital requirements, please?
So just for the folks here, we do 100 stress tests a week. We are quite worried about it. We always have been. We always did it. The Fed does one a year, and it's only one type. We do multiple different types. So, among the stresses we've always had were hurricanes, storms, floods, things like that. So to the extent it's real like that, I'd say yes. To the extent it's for social, public purposes, to have banks do something different on how they finance oil and gas, absolutely not. And if they did that, it would have an effect.
It does kind of come back to the old principle that banks are about collecting capital, pricing it, distributing it appropriately, and pricing it there. I think that's arbitragers. Okay. One last question. The state-owned Chinese banks continue to play a large international role, and the Chinese Communist Party is intimately involved in the banking system and have the ability to influence banks' lending activities and credit allocations. Could you discuss the challenges this creates in terms of global competition for U.S. institutions? Back to you, Mr. Dimon.
Yeah, it's a very good point. We have to compete with global Chinese banks. The four largest are now the largest in the world in terms of assets. They also operate in 50 or 60 countries, which they didn't do 20 or 30 years ago. They have less capital requirements than we do. They enjoy government support. The government wants them to succeed. And I do look at that as not today's competition, but tomorrow's competition. So all the banks here play a different role in the ecosystem, but to bank big companies and countries and things around the world, you need big banks. If you want to bank Boeing, or you have to operate in the 50 countries in which they operate and stuff like that. So I'm going to do everything in my power to make sure we can compete with the best Chinese banks in the world. It's very important to the future of America that America maintain its financial supremacy, just like almost anything else.
Thank you. And Madam Chair, I yield back the balance of my time.
Thank you very much.